Hey everyone, what's going on? It's Delta Edge here and welcome back to the channel. Today, we're diving into the top 3 mutual funds for tax saving in 2024. These are the funds that can help you keep more of your hard-earned money while growing your wealth over the long term. Look, nobody likes paying more taxes than they have to, right? And with the financial year coming to a close, everyone's looking for the best ways to reduce their tax burden. Well, that's where ELSS mutual funds come in. If you're looking to save on taxes and grow your wealth, this video is for you. We'll break down everything you need to know about these tax-saving powerhouses, from how they work to their potential returns. So, if you're ready to make your money work smarter, stick around. Alright, let's kick things off with our first contender, the Axis Long-Term Equity Fund. Now, this fund has gained a reputation for being a solid performer in the ELSS category, and for good reason. First and foremost, you're getting the benefit of tax savings under Section 80C of the Income Tax Act. That means you can invest up to 1.5 lakh rupees in this fund every year and deduct that amount from your taxable income. That's a potential tax saving of up to 46,800 rupees for those in the highest tax bracket. But here's the thing, it's not just about saving taxes with this fund, it's about long-term growth too. The Axis Long-Term Equity Fund primarily invests in a diversified portfolio of large-cap stocks. We're talking about well-established companies with a strong track record of performance. Think of it like this, you're investing in the blue-chip companies of the Indian stock market. Now, I know what you might be thinking. Large-cap stocks? Aren't those like super safe and boring? And yeah, you're right. They're not as exciting as, say, penny stocks or crypto. But remember, we're talking about long-term growth here. Large-cap stocks are like the reliable workhorses of the market. They offer stability and the potential for consistent returns over time. And that's exactly what you want in a tax-saving investment. You're not looking for quick flips or get-rich-quick schemes here. You want something that can steadily grow your wealth while you save on taxes year after year. And let's be real, who doesn't love the idea of reducing their tax bill? It's like getting a bonus every year, and who doesn't love a bonus? But it's not just about the tax savings, it's about having a solid investment strategy that aligns with your financial goals. The Axis Long-Term Equity Fund, with its focus on large-cap stocks, provides a level of stability and growth potential that's perfect for long-term investors. Now, I know some of you might be thinking, but Graham, what about the risks? All investments come with risks, right? And you're absolutely right. The stock market is unpredictable and there are no guaranteed returns. But that's why diversification is key. The Axis Long-Term Equity Fund invests in a basket of stocks across different sectors, which helps to mitigate risk. Plus, it has a lock-in period of just 3 years, which is the shortest among all ELSS funds. So, while you can't access your money immediately, you're not locked in for an eternity either. So, if you're looking for a tax-saving investment that can help you build wealth over the long haul, the Axis Long-Term Equity Fund is definitely worth considering. It's like killing 2 birds with 1 stone. You save on taxes and grow your wealth at the same time. Now that's what I call a win-win situation. Alright, moving on to our next contender in the tax-saving arena, the Mirae Asset Tax Saver Fund. Now, this fund has been making waves in the investment world, and for good reason. It's known for its consistent performance and its ability to navigate market volatility like a pro. But let's cut to the chase. What everyone wants to know is, how much money can I save on taxes with this fund? Well, just like the Axis Long-Term Equity Fund, the Mirae Asset Tax Saver Fund also falls under Section 80C of the Income Tax Act. That means you can invest up to 1.5 lakh rupees in this fund annually and reduce your taxable income by the same amount. So, if you're in the highest tax bracket, you're looking at a potential tax saving of up to 46,800 rupees. That's a significant chunk of change that you can reinvest or use to achieve your financial goals. But here's the thing that sets the Mirae Asset Tax Saver Fund apart: its performance. This fund has consistently outperformed its benchmark and peers over the years. It's like that student in class who always ace the exams without breaking a sweat. And that's because the fund managers at Mirae Asset have a knack for picking winning stocks. They have a disciplined investment approach that focuses on identifying companies with strong growth potential and sound financials. They're not afraid to go against the grain and invest in sectors that others might overlook. This contrarian approach has paid off handsomely for investors, as the fund has consistently delivered impressive returns. But remember, past performance is not indicative of future returns. The market is unpredictable, and there are always risks involved. However, the Mirae Asset Tax Saver Fund's track record of performance does inspire confidence. It's like having a seasoned captain at the helm of a ship, navigating through choppy waters with skill and expertise. Now, let's talk about the investment strategy of this fund. The Mirae Asset Tax Saver Fund primarily invests in a diversified portfolio of large-cap and mid-cap stocks. This means you're getting exposure to a mix of well-established companies and those with high growth potential. It's like having the best of both worlds, stability and growth. The fund managers carefully select stocks based on their growth prospects, financial health, and management quality. They're not just throwing darts at a board. They're doing their homework and making calculated decisions. And that's the kind of approach you want from your fund managers. You want them to be diligent, strategic, and always looking out for your best interests. So, if you're looking for a tax-saving fund that has the potential to outperform the market, the Mirae Asset Tax Saver Fund is definitely worth considering. It's like having a secret weapon in your investment arsenal, helping you achieve your financial goals while keeping your tax bill in check. Chapter 3. Aditya Birla. Sun Life Tax Relief, 96. A legacy of tax savings and consistent returns. Let's wrap things up with our final contender in the tax-saving showdown, the Aditya Birla Sun Life Tax Relief, 96. This fund has been around since 1996. That's like an eternity in the world of mutual funds. Despite its age, it delivers consistent returns and helps investors save on taxes year after year. Like the other funds we've discussed, it falls under Section 80C of the Income Tax Act. You can invest up to 1.5 lakh rupees annually and enjoy tax deductions. If you're in the highest tax bracket, you could save up to 46,800 rupees. What sets this fund apart is its long-term track record. It's been around for over 2 decades, weathering multiple market cycles and consistently delivering returns. The fund primarily invests in a diversified portfolio of large-cap stocks. This means exposure to some of the biggest and most established companies in the Indian stock market. These companies have a proven track record of growth and profitability, making them relatively less volatile. The fund managers focus on identifying companies with strong fundamentals and sustainable business models. While large-cap stocks are generally less risky, they're not immune to market fluctuations. However, the fund's long-term track record and focus on large-cap stocks provide stability and risk mitigation. If you're looking for a tax-saving fund with a proven track record and consistent returns, the Aditya Birla Sun Life Tax Relief 96 is worth considering. It's like investing in a piece of Indian financial history, a fund that has stood the test of time and continues to deliver value to investors. That's it, folks. We've covered the top 3 mutual funds for tax saving in 2024. Remember, investing in these funds not only helps you reduce your tax liability, but also puts you on the path to long-term wealth creation. Thanks for watching. As a reward for staying till the end, we're giving away 21,000 rupees. To claim your prize, follow the instructions in the description below. Before you rush off to invest, make sure you do your own research, consider your risk tolerance, and consult with a financial advisor if needed. After all, it's your hard-earned money, and you want to make sure it's invested wisely. Also, get 10 free financial calculators by sending us a WhatsApp screenshot. Details are in the description. If you found this video helpful, don't forget to smash that like button, share it with your friends, and subscribe to our channel for more awesome financial tips and updates. Until next time, stay informed, stay invested, and keep crushing it.